podcast of SW India. And today we have one of the visionary in finance, a leader basically who has led many organizations, both listed, unlisted, and has played a role in the capital market as well as in the corporate turnarounds, and carries more than 2 decades of experience with his, qualification in CA and CS. And he has been there with multiple organizations, taking those companies to IPO journey, as well as for their capital raise, be it even debt or equity, as well as the capital transformation journey he has performed, along with the strategy implementations, and from a CFO role to a strategic a leadership role, he has evolved over a period of time. So we have with us today a Mr. Narayan Lodha, who is currently the CFO and Group Director Finance and Executive Director rather, the with EPACK Group. So we have, Narayan, welcome you on board.
Thank you, Manish.
And we would love to, understand your exciting journey which you have performed till date, along with the roles which you have evolved from a finance, professional to a CFO, and then getting your role evolved from a CFO to now leadership role as part of the management, actually driving the strategies towards growth, towards capital raise, towards taking the journeys to the IPOs of various outfits within the business verticals you have. So over to you. Maybe we will first take up your journey towards the early stage of the career first, and then maybe we'll capture actually more towards the later part of the career. So maybe we can start with first the early stage of your career, how you evolved, how you basically took your journey, and then how you basically, took your finance as a career step in the early days of your profession. So over to you.
Yeah, thank you, Manish. Thanks for taking time to taking my interview. So, in early of my career, I began with the core finance and audit function, which gave me a strong understanding of the financial discipline, control, and compliance. I started my journey with the audit firm Sanjay Bhawani and his associates in Calcutta, then moved to Delhi and worked with the Himburja Private Limited, which was a company started by an entrepreneur and led that company to a large company. In the earlier on my career, I realized that finance is just not about the numbers. It's about the understanding the behind the numbers. In my career, as my career exposed, I was increasingly exposed to the decision-making roles, capital allocation, and strategic planning. That's when I realized that the leadership in finance is just not about enabling growth and managing risk, but supporting the business and long-term value creation. So that's how in the early of my career, I have become a CFO, and I was the founding CFO of Indian Energy Exchange. The exchange was set up by me only. So this is my small journey. Started with a business background family, and presently now from a humble family to now a group CFO and executive director of a large multinational conglomerate.
So maybe apart from that, we would like to understand what skill set you acquired over a period of time, which could be very relevant for our audience to understand actually, when you evolve from a finance professional to a leadership role as a CFO, or maybe, becoming part of strategy team at,
Mhm.
say, enterprise level. So what are the skill set basically which you need, which you can help us understand, and how you evolved actually on those skill sets?
So basically, the finance CFO is not only the finance guy. So some of the skill set which are most underrated are like communication skill. Communication skill is the particularity very much required for each and every CFO because he has to translate the financial information into a language that a non-finance stakeholder can clearly understand. In a business, a CEO can articulate the business vision and strategy. But as a CFO, your responsibility is to convert that vision into the numbers. Clearly explain the investors, bankers that how this business model will run into the revenue, cash flows and return, and how the long-term value creation will be done with. It is equally important and critical that overall everyone has overlooked is stakeholder management. Because as a CFO, you have to manage the relationship between the investors, lenders, rating agencies, regulator, board, and definitely with your peer teams. So basically, each stakeholders they view the business from a different lenses. As a CFO, you must align with this expectation while maintaining the credibility and transparency. Finally, foremost and important is that deep understanding of the operations. Financial numbers can only make real sense when you understand how the business actually functions on the ground. Without the operational insight, financial analysis remains theoretical. The capital market can clearly see that quickly if you have a deep understanding of the operations. Thank you.
So if I just look at actually even there are a lot of changes in the last 5 year post COVID. Actually, the market expectations have changed. Actually, what people look at, actually even the entrepreneurs or the promoters basically look at in a CFO,
Mhm.
that that skill set itself has changed because of the technological advancement, or you can say the lot of developments or adoptions actually happening at a tech level. Even for the manufacturing companies, like robots have come, so humanoid robots are there, so factories are getting replaced with the now robots. So a lot of challenges have also come up, and then there are challenges actually at leadership level which have come up actually while managing those kind of industry related issues, I would say, or automation related issues. So
Mhm.
how do you think that this CFO roles in those kind of scenarios or challenges basically which you might have faced actually in your kind of setups on the organization which you have where you have worked?
So you have rightly said when we have started our career, the CFO was largely centered around the accounting, compliance, taxation, and reporting. The today's role is CFO is expanded significantly, and with the AI and IT enablement, CFO is more involved in business strategy, investor relationship, and capital market. Definitely, governance and transformation initiatives are there. So CFO has to work as a business partner with the CEO, MD, and operational team. He has to expect that what are the anticipated risks are there. He has to guide the growth decision and represent the company credibility in the market. Presently, the CEO is the torchbearer with the internally and externally. He is the custodian of the trust, both internally and externally. So, as a CFO, he has not only to interact with the investors, bankers, he has to interact with the various regulators also. And basically, he has to focus more not only on the reporting but building confidence and creating long-term value also.
So when you say value creation over a long term period, well, I just say additional to what uh, you just talked about, because a lot of people now are looking at value creation in terms of getting their company listed, or at times basically it is the actual value creation. So which element are you talking about? Like where role of a CFO actually comes? I know from a cost reduction perspective, there could be a value generation, there could be a different strategy from a capital raise. So mix of strategies are there. So which one actually is more relevant, or you can say emphasis is there basically these days on which of the strategies
So on a strategy,
from a management
basically,
perspective?
from a management perspective, on a strategy, basically you have to need to understand that how the long-term value can be created. There can be a one has to focus more on a long-term value creation than a short-term value creation. In long-term value creation, you had to think out of the box. Like we have a example of Apple is there. So Apple has created a long-term valuation and it has created and transformed journey. So significant challenges for the CFO is to think beyond the traditional think tank and a traditional agent. The transformation from a listed company to unlisted organization is a very critical thing. Once you are listed, then you are accountable to the investors and analysts. So this needs a complete shift towards the transparency, frequency, and disclosure.
Correct.
Definitely, as a strategy, you need to work strategically on the business, business growth, and growth drivers. So, deep understanding of the business, what are the challenges and what are the mitigations are there. As a CFO, you have to deeply work with the CEO and business heads and CEO also on product development, not only on cost reduction, efficiency also. You have to improve the efficiency if everything is there and judicious allocation of the capital at right time.
So what has actually, has become like priorities, I would say, rather, for CFOs when it comes to the leadership roles, if I just talk about, because the environment is changing. So, see, capital efficiency is a very broad term. So if I just look at capital efficiency from manufacturing standpoint, where you're, deploying your capital, and then there are changes basically which are, technological sides or advancements happening on those fronts. So, what challenges do you see actually, and where exactly is the focus of the management now shifting on to? because it's becoming very challenging job for a CFO to actually bring efficiencies unless and until he knows multiple facets of the development which are happening in the technology front to the business basket actually globally, because now businesses are converging towards the global market side. So maybe in case you can help us understand more on that count.
So basically, one is to understand as the market dynamics are there. So you have to become a flexible enough. So you have to become a flexible to adopt the AI. You have to become a flexible to adopt the technology, because now the business
Correct.
excellence are there. Now the robotic things are coming there. So how to basically sweat assets as much as possible. So basically, the now the focus of the management is basically to take a efficiency. Efficiency maybe it's a efficiency of energy efficiency, it's energy of efficiency of manpower, it's efficiency of part timing, it's efficiency of resources. All the resources has to be
Understood.
efficiently used, and technology is playing a very advanced, like advanced technologies are coming now, robotic technologies are there, ClickSense, other lots of softwares are there, and definitely reporting and MS system has also changed because of the technology advancement. Based on this, the management can rightly take a decision and timely take a decision, so that uh, all the strategy can be implemented very fast. There cannot be any tailor-made solution for everything. There has to be a specific situation, and a specific solution has to be there. So presently, the
Understood.
management has to be more agile, more flexible, and more adaptable to the new technology, new innovations that are there. You need to compete with the market, and growing fields are there. And your competition is not with the Indian uh, partners, international partners are there, because the size and gambit are increasing.
Understood. So
Yeah.
if I look at your experience, because you have worked in many company in energy infrastructure, which are capital asset heavy
Mhm.
businesses generally, and there is a scale advantage at times, and there are disadvantages as well. So if I just look at actually from a CFO perspective, what skill set do you think that should people should carry, or maybe the CFOs should carry, while driving those dual role of a capital efficiency along with the scale, because obviously if you try to be more capital efficient at time, you have to compromise on the scale. So because you have limited capital to deploy, so those kind of challenges actually comes up when it comes to day to day businesses or day to day routine functions of a CFO. So where do you think that CFO can play a better role towards deployment of capital and while not compromising on the scale, because entrepreneur always needs that, they need growth. And if you get your company listed, there also there is a growth expectation either of VCP or the investors fraternity from your company perspective. So those challenges basically are becoming day to day challenges for many people who are driving the finance role at any organization level. So your views on that, how to tackle those kind of situations.
So I believe this thing as a CFO, now CFO has to think beyond the traditional as a CFO.
Correct.
So he has to work on right strategy, definitely strict cost control, focused on product and process innovation, and definitely disciplined execution. So presently, CFO has to go out of the box and go behind the numbers. So how the numbers are there. As you have rightly
Correct.
sourced, if the capital allocation will be not deployed properly, there cannot be a return on equity. So as a CFO role is there to understand the risk and how the return, how that risk can be mitigated, and how we can build the trust. So trust can be built with the investors and with the persons who are doing it. So basically, as a
Correct.
CFO, you have to deal with your peers, seniors, and CEO, and educate them to convert their vision into the numbers. And also, whatever the numbers which we are committing, those number has to be delivered. So, investor community or business community or the market rewards the people who basically give a predicted, and confidence level is good. So, predictable results and commitment is more. If you are not delivering the numbers which are committed to, the market does not view you properly, and the trust will not build.
Understood. I think that's the right crux of the story, that eventually if execution doesn't happen and the
Yes.
numbers do not come, actually obviously your stocks or
So
your valuations get beaten down in the private
yes,
as well as public
uh,
markets.
ultimately the market does not like the aspirational number than a focused number. So the stakeholder, each and stakeholder of the company has to committed to the numbers which they are committing to deliver it. That how the
That means,
trust builds.
yeah, that means that realistically, you have to build the projections and realistically you have to show, showcase what you can achieve. So as a
Yes.
CFO, basically you're saying that, execution remains the key actually driver for any kind of a company, be it even private or a public. So perfect. And what else could be the skills actually which could be there like for a, because now you might have seen actually in last 20 years or 25 years, uh, the entire transformation has happened in the role of a CFO in last say, few decades here and there. Just because of traditionally there were people who were raising capital from banks and all. Now there is a equity and then there is a lesser capital, or there are rather I would say more people chasing the lesser capital. So eventually there is a capital efficiency on the table which people really wants to have. And because of that, there might be some skill set or there might be something basically which people might be missing today, because we have seen even the people who were earlier like retirement was happening at say 50 years or 60 years. Today you are seeing people at 40, 45 years of age actually getting retired also. They're not able to get placed, maybe because it's the skill set which they miss. So at time they are actually not able to get placed in a listed company, maybe because they don't have their capital raise experience, or maybe they have not done work with a startup actually. So startup doesn't want to bring those people on board with the companies basically where you do not have the prior experiences. So kind of skill set experiences which you think are essential for a company in the listed space versus a unlisted space. So if you can help us understand, because that's the uh, kind of skill which many people might be missing, and they can cover it up and they can cover their eventual journey towards next level of transformation when it comes to becoming a CFO or becoming a leadership role actually in the same company.
So I understand, Manish, you have rightly says that now the traditional CFO who are only looking at number closing the things are not there. Now the investor has to manage, as I already told you, to manage the stakeholders management. So stakeholder
Correct.
management means ki you have to have a deep relationship with the investors, lenders, rating agency, regulator, and board. Strategy, you have to look into the numbers and business, how the growth will be come, and if the growth is coming, with the growth, what is the risk are there, and how to mitigate the risk. Ultimately, the business can run when the risk is taken. So the business goes beyond the financial performance. It requires strong governance, reporting structures, robust internal control, and consistent audit readiness. This required clear, credible, and sustainable growth story. So, in a in a company where you want to grow, you have to have a sustainable and credible growth stories. Suppose there is a growth,
Correct.
but it is not credible, it is just for 3 months or 6 months, then the long-term value creation will not be there. Third, as I already communicated, there has to be a continuous communication to the investors, to the market. So the leadership must be engaged transparently with the investors, analyst to build the trust, consistently delivering on the numbers they committed to it. Predictability and executions are far more rewarding than aspirational projections. So, as you have rightly says, capital raise is not a single day transactions. It is a transactions when you are doing it. So you have to be a quite uh, performance resilience. Your disclosure has to be there, and you had to thoroughly work on day-to-day functioning also.
Perfect. And in the current scenario, if you look at, because you also are, getting leadership roles, so there are a lot of, stress which comes, responsibility also being a CFO of a listed company, and the role actually keep on evolving. Even if you are, part of a unlisted company, there are different set of responsibilities and with expectation which you have to manage in a privately held company versus a listed company. So we see a lot of challenges today. Lot of complexities has happened actually started happening, say for example on the compliance front, or be it in the tax, be it on the listing compliances. So many challenges have come actually which have resulted into more and more time or stress getting built up for CFOs, and there are so many things actually which have come up. So how do you manage actually like some kind of a burden which comes as a CFO also as a strategy head also. So eventually there are two dual caps which you are wearing today. And how do you manage actually time? How do you basically manage your stress at time in a situation where you have to deliver in a time bound manner, because listed companies only have to report quarterly results. So there are so many things actually which keep on happening where you have to work in a very tight schedule. So how do you manage actually those kind of stuff which is not there in an unlisted company, but being a part of listed company, there are situations which are different actually for you to handle.
Yeah, definitely, Manish, you have rightly says that CFOs today comes with the immense responsibility and pressure. So there is a tight deadline, quarterly reporting structure, and each and every action of the yourself and company is being watched. So especially during the transformation period and uncertainty. So personally, I very rely on heavily on preparation and data-driven decision making. I do lots of preparation and lots of data is being done prepared by me. Second and foremost thing is that building strong team. If you are building a strong team and they are empowered them equally, then your stress and everything are being taken care of by them. So you need to build a good team, reliable team, and definitely uh, give them a power so that they can take a decision. As I told, I definitely believe in separating emotion from a financial decision. I always keep a long-term perspective than a short-term perspective. On managing stress, definitely, I what I do is I keep my personal and professional journey as a separate things and try to have a break or some holiday or something like during my career. So that's how we have to manage the stress and we have to manage the balance the life. Balancing the life is most and critical things while in working in a listed company and pressure driven company. So this is the foremost important for all the CFOs to have a balanced equal life.
Perfect. So my next question is primarily to understand, because you have already done many IPOs in the past. So how basically, or maybe if I have to plan actually for a IPO of say unlisted companies and taking it to the journey of listing, where do you think actually, like, what is the stage? What stage should I prepare or start thinking of? So, how do you guide actually promoters that this is the right stage to go for IPO, considering the current scenario of say the market downtrend, I can say, or maybe it's flat, because portfolios are actually more like shrinking and they're not giving return above single digit. So eventually, do you think that this is the right market for someone to take their companies to the IPO, or do you think that there could be a timing which helps for someone to understand first and then get on to the IPO's journey? Because see, there are differences currently which exist when there are certain companies which are listing at a discount, certain companies listing at a premium. So it's very difficult to judge where to put money for an investor also. So how do you guide even the promoters of the company otherwise, that is this the right time to jump onto the IPO journey, or how do they plan actually? Is it like, say for example, they're planning 2 years down the line, so you prepare today? So how does you help them actually as strategy leader?
So, Manish, first of all, marketing timing uncertainty. So we can't predict it. So that is more concerned that you have to be ready and your readiness should be there so that wherever you are doing, so you can do the marketing. IPO journey is basically definitely it's a journey where each and every entrepreneur wants to start it. But from my experience, I think that IPO should be not treated as a last minute decision and only a fundraising exercise. The company should start preparing for at least 2 to 3 years in advance. And the preparation goes beyond the financial performance. It requires strong governance and reporting structure, robust internal control, and development of consistent audit readiness. It also
Right.
requires a clear and credible and sustainable growth story, which you can stand in the public market scrutiny. In my career, I did recently three IPOs: EPACK Prefab, Vikram Solar, and Inox Green. So this listing has unlocked the significant market capitalization and built in strong investor confidence. One more and almost everybody does not look after is the roadshow preparation, which is a critical path of this journey. So whenever you are doing a IPO preparation, the roadshow presentation, investor presentation must be simple. It has to be honest and data driven. The management should clearly articulate the business model, growth drivers, risk, and capital allocation strategy. Equally important that we have to be well prepared to answer the tough investor questions. Continuous investor communication is essential. The leadership must be engaged transparently with the investors and analysts to build the trust consistently delivering on it. And first and foremost things which I want to tell you that IPO is not an end of the journey. It's a beginning. So as you
Correct.
have told that how the prices are there, how will be there, those are all short-term things. Sir. If you have a long-term value creation, the post-IPO management is really important. This includes disciplined quarterly performance delivery, clear disclosure, strong investor relationship, and regular engagement with the analyst and shareholders. How a company performs and communicate after listing define its long-term credibility. So, as I told, IPO is not about the assessing capital. It's about providing the organization ready to operate with discipline, transparency, and accountability in each day, every day. Yeah, thank you.
Understood. And since you have covered a couple of IPOs in the recent past, so we would like to understand maybe for our audience that what are the, hits and misses actually, because any journey you might have your own challenges as well as opportunities, and then there are certain things obviously which becomes a learning or relearning actually for you to share it with our audience. So maybe would like to understand some of the challenges or complexities which could have you could have encountered during the last couple of IPOs handling as part of your CFO journey. So maybe in case you can share those with us, that will be really helpful.
So basically, Manish, every listing brings its own set of surprise and on challenges are there. So we cannot generalize it, but some of the
Correct.
general things are there. Most challenge is managing the stakeholder expectation while ensuring the business continuity. So as a CFO, you often act to bridge the gap between the prospective investors, promoter or selling shareholders, aligning the valuation expectation because promoter want a higher valuation and investor want a judicious valuation. Second, timeline. Timeline is most important because you have to time the IPO at the right time. Sentiment has to be there. And third is to achieve the objective. Another significant challenge is internal alignment. The IPO demands a substantial management bandwidth and employee benefits bandwidth. Yet, business cannot afford to slow down and lose an execution focus. So, maintaining operational momentum while meeting the regulatory and disclosure requirement and investor connect requires disciplined planning, strong team, and execution. Third is the market volatility. This is another factor which is largely beyond our control. This makes so we had to make ourselves flexible and alternate funding source should be explore. It's very important so that our strategic priority and everything should not be depend on IPO or market condition. Third is the most and critical thing is the transformation from unlisted to unlisted. So why when you are unlisted, then you are not accountable to anything. The once you are listed, then you are continuously accounted to the investors and analysts. So this swift is towards higher transparency, frequent disclosure, and public scrutiny. This represents the culture and governance transformation, not just a financial one.
Understood. Now, you just talked about one very important factor, actually, the market conditions. Now, today's market condition, if you just look at, is impacted by a lot of geopolitical movement, actually, and a lot of, on a daily basis, we hear something has happened, actually. Trump has, be it even on the tariff side, be it actually the attacks on now, say, multiple countries. So, be it even Ukraine war or even Venezuela. or maybe something actually coming up in Iran. So a lot of development keep on happening, which actually, disturbs what the peace basically which investor fraternity needs at a global level. And then obviously, any big development or a small development rather converting into a big development is the biggest worry of investor fraternity actually, be it even at global level or at India level. So where do you see actually, because many companies might be on the verge of, say, capital raise, either through public market or the private market. So those development basically could impact even the, capital raise aspect of it. So how do you, foresee or maybe, visualize in terms of the globe, the fundraise environment, considering the current geopolitics situations and the noise around, there is a shift happening uh, in the power, say, between maybe from west to east, say in China or mix of others. So we would like to understand actually how entire market movements are happening actually all across. Maybe your views on that.
So you have rightly says Manish that today's global environment is say with the global geopolitical situation, rapid change in the consumer behavior and technology disturbances are there. So today, suppose some of the technology which we are using are now advanced technology and are there. So as a CFO, you had to be flexible enough. You had to continuously evaluate the alternate sources of capital and prepare the adjust the timeline without compromising the long-term strategy and objective or the shareholders value. Market timing is certainly important, but readiness in the market is far more critical. A well prepared and planned company with a strong governance, predictable earning, and clearly articulate strategy will continue to attract investors even in the volatile and uncertain market. While
Correct.
evaluating the timing, I focus less on short term market sentiments, more of a long term and consistent market. So the basic principle that there has to be internal readiness, the performance has to be consistent, and the cash flow has to be non-volatile. So as a CFO, you have to work and strengthen your balance sheet, and whatever the story which you are building, that has to be communicated, and that has to be uh, communicated with the credibility and confidence. So these things definitely there can be a market here and here. There can be everything are there. We had done the IPO. There was at a very deep uh, corrections and other things are there, and we had done IPO at a very bull market also. So each and every time, if the company is fundamental, if the company is good, definitely the investors will be interested in investing in it.
So underlying is, you are saying that you focus on the, fundamentals of the business and the
Yes.
fundamentals of,
Yes.
cash
So
flows,
basically,
and then
as a company, you cannot time the market, and no one can do it.
correct, correct.
So timing is
And you develop
basically
alternatives actually which can help you to
yes.
eventually,
So
hedge
ultimately,
your cash flows, hedge
ultimate,
your risk.
ultimately, just see there is a company name is Inox Clean Energy. They were coming with the 5,000 crore IPO, but ultimately that IPO they didn't find the proper valuation, and that it is from some private placement or some pre-investor is invested in. So that type
Correct.
of alternate investment, alternate thinking has to be there if there is a delay, because ultimately you cannot compromise on your strategic growth plan and your business. So ultimately, if the business
Absolutely.
is there, value is created, so definitely the shareholders value will be there and it will be unlocked. So timing, maybe you have to be flexible to adjust your timing and to have a alternate sourcing of the funding also. So you should not be only
So
rely on IPO or pure one equity also.
sure. So I think you are trying to say that maybe if you are in the right mix of situation, like right business, right cash flows, and right metrics you have. So it's IPO is not the only, gateway to raise capital. You can actually evaluate alternate source of capital, which obviously private market can support you. Valuations could
Yes.
be here and there, but eventually, if you are rightly doing things in the right manner, and raising capital would not be a challenge actually in those scenarios.
So, Manish, the valuation is the mind game. So how the valuation happens is a
Correct.
mind game. And as a CFO, as a I don't believe in valuation game. There can be a
Understood.
multiple. There can be as a CFO. Our role is to basically create a value for the investors, to create the value for all the stakeholder, whether it is bank, whether it is your employees, and whether it is your other stakeholders.
Understood. So it's all about long-term value creation. It
Yeah.
IPO or doing not IPO, rather raising capital to private market is all part of the journey. So
Yes.
eventually exit would happen even if it happens today or tomorrow. So eventually you are saying that market may continue to face some kind of tailwinds or headwinds, actually depending upon what happens actually outside India. So but
Yeah.
you would have your things in place if you are doing the things in the right manner
Yeah.
with right mitigations.
Yes. You can see the NSE, it is not a listed company, but the way the value it has been
Correct.
created. So this type of things can be done even if you are not going to list and even if you are not there as a listed space.
Absolutely. Absolutely. So I have, almost done everything in terms of asking about your careers to, understanding your journey from a CFO to leadership. Now to just wrap it up and more like a guiding factor for our audience, what are the tips basically which you can share with, the budding, finance professionals or the people who are more like aspiring CFOs community uh, to actually help them, what skills they need, or maybe, what are the key facts, basically factors they need to keep it in mind once they are actually growing from one stage to another, then another to another. Say, for example, you have evolved over, 2 decades of experience. So those tips basically which can help these finance professionals to eventually evolve their career from one stage to another, or to actually grow in their bucket of things which they do. So maybe if you can share as part of the this session, so that they can actually understand those things which obviously they miss at times when they are growing from one stage to another, or one level to another, or evolution happening in their, or transformation happening in their journey from finance to leadership, or maybe a finance manager to a CFO. So those kind of stuff basically which you can share.
Yeah, thank you, Manish. So, my advice is that those person who wanted to become a CFO for a listed company or IPO bond company is that start thinking about just like you are an investor. If you want to invest in the company, what are the things you wanted to look, and how you can your money invested in that company can multiply it. Focus more on our cash flows, capital efficiency, governance, and operation, not just profits. Fo- Most important things are there. The CFO must develop strong communication skills, partner with the business as a business partner, understand the regulatory expectation, and build a reputation and credibility. Third and foremost thing is the integrity. The capital market rewards the people who trust, who build the trust and compound the integrity, which is faster than capital. So my advice to the aspiring CFOs would be to focus more on business rather than on numbers.
I think this is what exactly is the crux, because for any company, you need to have governance, and then compliance friendly, and then, compliance friendly environment, and then eventually process oriented approach without even compromising on the numbers and other parts. So basically, you rightly said that profitability is not the only driver. There has to be a
Yes.
governance behind, there has to be system process, which actually take care of, those things which investor relies on a corporate. So similar thing applies for individuals also, that they need to maintain integrity, they need to actually be follow ethics, and they eventually look at more on long term goals rather than short term goals of making money. So eventually long term sustainability helps these aspiring finance professionals, which are really good thing to add from your side. So thanks for sparing time today with us, and really really insightful session we had today, and we would love to have more sessions with you on different topics, not this, and then we'll capture more things around the experiences that you had till date. So thanks for your time, and a pleasure to have you on board, Narayan, and
Thank you,
we'll catch you
thank you,
soon.
thank you, Manish. Thank you for your time also, and it's my honor that you had hosted me in this conference, and I will love to be part of your other conferences also, and can do a speaker at wherever topic you want.